Yo, what's up guys? It's Brian Built Wealth here. Here we're gonna show you right now how I research any stock or ETF in under 2 minutes so I don't get bamboozled by trash investments. Alright. So first thing is I check the 5-year chart. If it's not trending, not going up long term, I just move on, Unless of course there's a reason for it. But for the most part, if it's not up by the 5 years, might be something more stable, Step number 2. Next, I look at what it's holding. So if it's an ETF, I want to see what it has, what I'm investing in, what type of companies it owns or tracks, not just the vibes. Step 3, I check the expenses. So if the fee is too high, my gains are gonna get eaten, so I don't want that. So you want the expense ratio to be low. Step 4, I check the dividend history. If it's a dividend ETF, consistency matters, and you want to see that it's growing as well. Not crazy, but that it's growing steadily. A good example of this would be SCHD. Last thing, step 5 is going to be ratings, opinions. Review places like Morningstar, Google, analysts. Not just copy them just to see if anyone says anything crazy about them, And that's it. Pretty much simple, clean, and quick. If it's a company, you want to see what they're involved in. The PE ratio. The PE ratio basically is if a stock is overvalued compared to its other companies around it. And a quick definition of a PE ratio is the proportion of a company's share price to its earnings. So its price compared to its earnings, PE, right? And if it's high, that means that the stock could be overvalued, or that investors are expecting high returns, or high growth. All right, so just be careful of high PE ratios when you're searching up stocks. And we're remember right now we're in all-time highs, and so that's pretty much it. I'll show you guys what I'm invested in and what I think about it. All right, so first I wanted to talk about SPMO because I showed it a little bit in my video. So this is interesting. It tracks the 100 of the SP 500 components, which is a strong momentum. So basically, I think it's either every 6 or 3 months they switch into companies that they think are going to take off, and they've done pretty well for this year to date. So I have it in kind of my taxable brokerage, but if I go to my Roth, I also have a little bit. As you can see, SCHD, dividend stability, is gonna make me feel comfortable when the market goes down. I could, if I was more risk inclined, I could make this into something growth wise, or just put into VU, but I like the stability that it has. As you can see, growth, what more can I say? Beating out the S&P 500, so it's good. And lastly, I think if you have seen my past videos, you've seen that I like bank SoFi, and I use SoFi, so I like that they're appealing to the younger generations. I think they came out with something about crypto, and they're one of the first people that does stuff with crypto, so that's cool. And I think this is a good place to buy. As you can see, a lot of people think so too. So yeah, that's it.